I mean, I think that $1 million Bitcoin is in the cards because I do think that Bitcoin could be as large or larger than gold. And I think gold's probably going to increase its market share as well. I mean, it's been doing well in recent years, and I'm still bullish on gold. So I think that both gold and Bitcoin, I think, are going to have a little more prominence in the years ahead. And Bitcoin at $1 million is only a 20 trillion-dollar market cap, 21 trillion fully diluted. So it's not really that big of a market, especially over time. When you include another 6 years of inflation and money supply growth, I think we're entering another upward liquidity cycle after really like 2+ years of kind of being range bound in liquidity.
Lyn Alden begins by emphasizing that predicting Bitcoin's price in the short term is difficult, as the market is influenced by a range of macroeconomic factors. However, she expects that over the next 18 months, the US dollar may weaken as the Federal Reserve cuts interest rates. This shift could lead to an increase in global liquidity, which would be positive for Bitcoin. Alden emphasizes that rather than focusing on short-term price targets, she prefers to look at the long-term direction of Bitcoin. She believes that Bitcoin has the potential to reach $1 million, as it could grow to be as large or larger than gold as a store of value. Gold currently has a market cap of around $10 trillion, and Alden thinks Bitcoin could eventually surpass this, especially as inflation and money supply growth continue over the coming years.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
As a base case, I would expect higher. I'd say next 18 months or so. It's hard to time things precisely. We are generally seeing, as the Fed starts to cut interest rates, we're seeing a softer dollar. It doesn't mean it's going to be a straight line, but basically some like the catalysts that kind of really propped up the dollar are kind of fading. And the dollar, the United States runs a structural trade deficit, which for most currencies would be very weakening for their currency over time. But the United States is also the global reserve currency, so we have all those dollar-denominated debts around the world, and all of that represents inflexible demand for dollars. So there's this balancing point. Whenever we tighten monetary policy, we actually are pretty capable of strengthening the dollar. Whenever we loosen monetary policy, that tends to be pretty dovish for the dollar. And so because I expect a somewhat weaker dollar, and I expect probably going back to more global credit creation by next year, and probably the year after that, I think we're entering another upward liquidity cycle after really like 2+ years of kind of being range bound in liquidity. So Bitcoin has followed this liquidity cycle pretty closely, and my base case over the next 18 months is probably for both liquidity and Bitcoin to go up, although I don't really have a view of, say, the next 3 to 6 months. I mean, these are processes that take time to play out. I'd be surprised if we don't see 100K. I mean, that's kind of like a back of the envelope rough expectation, where I would think that the cycle would be, I would consider the cycle stunted if we don't reach that. But other than that kind of rough level, I mean, there are easy scenarios that you can imagine. Over the next 18, maybe 24 months, you can have a wall of liquidity and institutional buy-ins and some sovereign announcements, and you can get the crazy numbers. Or you could barely get over 100K if you even make it there. So I don't really have views, because I didn't have to predict not just liquidity, but like what individual nation states will do, or like, whether there's gonna be like another MicroStrategy that decides to come in. So it kind of comes down to like one billionaire's decision or not, right? So rather than price targets, I try to just have a sense of direction and kind of long-term prices that make sense, not any one cycle. I mean, I think that $1 million Bitcoin is in the cards because I do think that Bitcoin could be as large or larger than gold, and I think gold's probably going to increase its market share as well. I mean, it's been doing well in recent years, and I'm still bullish on gold. So I think that both gold and Bitcoin, I think, are going to have a little more prominence in the years ahead. And Bitcoin at $1 million is only a 20 trillion dollar market cap, 21 trillion fully diluted. So it's not really that big of a market, especially over time when you include another 6 years of inflation and money supply growth. Maybe 1 million by 2030 is a little bit aggressive. Like if I were to, put my kind of guess hat on, I'd probably give myself till 2035 or something. So I don't really have specific time frames like that. But I do think that that's a level that would make sense for Bitcoin to eventually get to, if it continues to be like the global leader in digital money and portable store value. I mean, long term, probably Bitcoin. I think that anyone in traditional finance that has no Bitcoin position should have a Bitcoin position. Obviously, it doesn't have to be like all in, like degen, leverage long, but like not having any Bitcoin, I think is the easiest low hanging fruit to fix. Even if the thesis doesn't work out, if you got 3%, and it's fine. But if it does do some of those really bullish outcomes, it's good to be on the right side of that, even with a small position. And aside from that, I think there's like other assets out there that I think could do very well, but they all have counterparty risk. So, for example, I think that Chinese equities are super cheap right now. Nobody wants them, and I'd say there's a high probability that 5 years from now they've done very well from these low levels. But then there's some minority position where you literally just get zeroed out from owning them. Kind of like if Americans owned Russian stocks, a little over 2 years ago, those companies are still there, but your claim on those assets is basically just sanctioned away. So any investor has to take that into account. So I think that there are a lot of opportunities in equity around, but I would say that Bitcoin and Bitcoin Venture are certainly where I'm focusing a lot of my time on.
Alden explains that Bitcoin's correlation with global liquidity is stronger than any other major asset class. In her analysis, Bitcoin is more closely tied to liquidity cycles than stocks, bonds, or even gold. This strong correlation means that as liquidity increases globally, Bitcoin is likely to benefit more than other assets. Two major components of liquidity are the rate of global credit creation and the strength of the US dollar relative to other currencies. When the dollar weakens, global liquidity improves, which in turn boosts Bitcoin's price.
So I put less emphasis on that than others. I mean, obviously over time, the halvings are important because the new supply coming to market is relevant. So as that goes down, that is relevant. But I generally view global liquidity as being more impactful. I've done analysis. Actually, I have a report coming out with a colleague, and we did analysis of liquidity correlations, Bitcoin versus global liquidity, and then also other assets compared to global liquidity. And it does turn out that in any given 12-month rolling period, Bitcoin is more correlated with global liquidity than any other of the major assets that we do. So stocks, bonds, gold, foreign stocks, things like that. They're not, many of them are just to varying degrees correlated with liquidity, especially stocks. But Bitcoin is the most correlated with liquidity. And most of those highs and lows are associated with liquidity rising and falling. And the two major components of liquidity, the way I measure it, one is basically the rate of global credit creation. And then the other factor would be the strength of the dollar relative to other currencies, which is relevant for what we talked about earlier, which is that a lot of countries in the world have dollar-denominated debts. That's kind of the unit of account for a big part of international finance. And so whenever the dollar is strengthening, that's actually putting a lot of pressure on global liquidity. Whereas when the dollar is weakening compared to other major currencies, that's actually pretty positive for liquidity. So I think a lot of the correlations that people associate with the 4-year cycle are actually liquidity, which kind of is overlapping with it, even though I do think that there also is some relevance from the halving. The biggest kind of market that's being addressed here is good money, right? So we live in a world where if you add up all assets together, it's something like 900 trillion. Like it's a pretty comically big number. And of that, like the bond market is like hundreds of trillions. The real estate market is hundreds of trillions. The equity market's like 100 trillion. The currency market is like 100 trillion. And then there's like, gold is under like 20 trillion. Fine art is some trillions, is basically the whole kind of long tail of other types of assets. And basically, if you have a really good new money that the world accepts over, a 20, 30, 40, 50-year period as it kind of reaches whatever its total addressable market is, I think that's a massive market. That's like a huge market that could be bigger than gold, for example. Whereas I think that, the other things that can be done with it are interesting, but, they're more like $1 trillion opportunities, not like $10 trillion opportunities. So, I mean, one of the examples is Guatemala timestamped its election, 2023 election, into Bitcoin, right? So they basically they all people cast their votes, and then at any given table, I think there's like 25,000 vote counting tables throughout the country, and they vote their X number of votes that they're kind of assigned to, and then the vote counters sign it and observers sign it, and then that sheet is scanned and then immediately timestamped. It's hashed into the Bitcoin blockchain, so it's not actually stored on Bitcoin. It's stored in some other any sort of other servers and backups and things like that. But the point is that you can then point to the Bitcoin blockchain and say it was hashed into Bitcoin at this time. It was like timestamped, and that this specific thing was not altered from that time period. And it was put in like literally minutes after all those people signed it, and they did that for the whole nationwide election. So
Wow.
that's using Bitcoin for its basically being the most immutable database in the world, regardless of it being money. It's just it's a database. So there are non-monetary use cases for it. Including some of these other layers that could be built out. And they're interesting, especially from a venture standpoint. They can open up interesting investment opportunities. But for the network itself, I view the biggest use case is basically globally portable store of value and international value transfer settlement, basically.
Alden notes that many people associate Bitcoin's 4-year cycle with its halving events, but she argues that liquidity plays a more significant role. While the halving reduces the new supply of Bitcoin, the larger driver of price movements is global liquidity. The intersection of these two factors, liquidity cycles and the halving, has a profound impact on Bitcoin's market dynamics. Alden highlights Bitcoin's potential as a database for non-monetary uses. One example is Guatemala's 2023 election, where election results were timestamped on the Bitcoin blockchain to ensure transparency and immutability. This demonstrates Bitcoin's potential as the most secure and immutable database in the world, independent of its monetary applications. Such use cases show that Bitcoin's value extends beyond money, offering innovative solutions in various fields.
Please like and subscribe my channel.